There's a lot happening within the crypto market. BlackRock met with the SEC yesterday for the fourth time to discuss its Bitcoin ETF application. Bitwise predicts when the spot Bitcoin ETFs are approved by the SEC, they will collectively be the most successful ETF launches of all time. Van Eck, who has the Valkyrie Bitcoin Fund, filed a fourth spot Bitcoin ETF amendment with the SEC. Several days ago, Fidelity updated its spot Bitcoin ETF applications after discussions with the SEC. It's predicted that Donald Trump will trigger in 2024 a $2 trillion Bitcoin price boom. There's been so many meetings with the Securities Exchange Commission, the SEC. The estimate is between January 8th to January 10th, all the Bitcoin ETFs, with the exception of Grayscale Bitcoin Trust, should be approved. The jury's still out on an Ethereum spot ETF. If you follow social media, you're probably getting freaked out about the price decrease in Bitcoin. This is because on social media, any price decrease is greeted with it's going to zero, or a bloodbath is incoming, and any positive momentum inside Bitcoin is treated the exact opposite way. Let's look into Bitcoin in a little bit more depth. Bitcoin has been trading for more than 5,100 days. If we simply look at price action over this period of time, we're not going to get the right perspective on where Bitcoin could be going. We can see Bitcoin is losing a bit of steam, and we can see that it's had a cut under through this particular support line. It's now turned to resistance. Now, what does this mean? This means in the short term at least, we're expecting negative price momentum. But Ken, what about all that news? A spot Bitcoin ETF is going to get approved. You will often find very, very positive news when price goes down and very negative news when price goes up. You can't trust the news. But Ken, if you can't trust the news, what do you trust? You just trust structure. When we look at the structural support and resistance lines, and this is being marked up for over 5,100 days, we can see this 41,634 level has held particularly well. Bitcoin hasn't even come down here and tapped it, not as of yet. And when we look down, look at all these structural support levels. Bitcoin is so strong underneath. Anybody who would say that Bitcoin is going to melt down doesn't understand structure. Unfortunately, this is most people. For example, when Bitcoin fell down here, and this was a result of the Binance fine, look at all this structural support. What did it do? It acted as a safety net. More and more safety nets getting hit as price was coming down. What happened then? Price rebounded up. Where did it rebound up to? A structural resistance level. And then it found support, slowly grinding its way up. You will find the price is always moving between structural support and structural resistance levels and back down again. It's always moving in a wave. Typically, people will just look at a chart, not with any structural levels on, and structure can only be marked up for the entirety of price history. If not all of price history is marked up, you get a sample, and a sample is not representative of the population. That's what we call recent indicative price, and RIP does exactly that. Recent indicative price RIPs your money. It will have you buying at the wrong time and selling at the wrong time. We can see if we turn to a daily basis, Bitcoin's momentum is pretty impressive. If we overlay this price action with SZs or Stanfield zones, which accumulate SLs, or that structural levels of support and resistance, we can see that we've overcome one very major area of structural resistance. This was between 35,261 and 36,062. We came back, retested that as support, then managed to break through this secondary, very heavy level of structural resistance and turn it to support. It's just turning it to support right now, just like what we saw back here. This is completely normal. The next area of structural resistance is from 45,996 to 46,721. A lot of people will simply tell you, I can tell you where Bitcoin's price is going because I'm going to look at only the Bitcoin chart. Those people do not understand financial markets. Sacré-cœur, Ken, how could you say such a thing? The problem is, all markets are intercorrelated and interdependent. We saw recently that the S&P 500 came up, filled a fresh air gap, encountered structural resistance, and backed off. This was to be utterly anticipated. We saw the same thing with junk bonds. When junk bonds is rallying, we expect crypto and the stock market to rally. As it hits structural resistance on the S&P 500 and junk bonds, we expect retracements. We also expect the DXY and DXY dollar pairs, such as dollar yen, to come up. We've recently noted that the US 2-year has been coming up and the 10-year also. This also adds to retracements and devaluations in the euro dollar. When the yields come up, it will inversely affect gold and silver. Unfortunately, people will just tell you that they can look at one chart and say, oh, I know what's going to happen because I'll just look at this one chart in isolation. I'll ignore all the cross interdependencies because they're just too hard. And I'll just RIP my money with story-based analysis and very recent indicative price. What you will find is that the more time you spend in financial markets, the more you will see everything is intercorrelated and interdependent. For example, if total crypto market cap comes down and Bitcoin is coming down, the probability of everything else coming down in the crypto market is really high. Yet people don't draw these distinctions. They don't understand how financial markets work. It's no wonder they blow their accounts up continuously. If you're an investor or a trader and you do not understand cross-interdependency analysis, you're in a lot of trouble. You're just going to be gambling. Learning timing is critically important, and there's a free printable template at ctksmethod.org for this cheat sheet. It's just an earlier version that's available there. This one is in beta, but will be released soon. What caused the yields to come up and spike and the dollar to strengthen, thereby pushing down the stock market and crypto? It's all about the federal funds rate at the moment. One day ago, the probability of an ease was 18.6%. It's come down to 12.4% today. That's the resultant spike in the DXY and the yields coming out inside financial markets, as well as the S&P, the stock market getting hit, and especially crypto. Therefore, to understand when the stock market will turn around and when crypto will turn around, we must understand structure. So let's get into it. Junk bonds is a really important indicator to be aware of, and you can see this is on a daily basis. Junk bonds was just hovering, and then exploded and then retraced. How could we ever have predicted this? We knew exactly what junk bonds would do because we've got the indicator. And when we pop it on, what do we see? A fresh air gap here, and fresh air gaps get filled very quickly, and a lot of structural resistance here. That means the price is coming down. You might say, Ken, I don't care about junk bonds. You should. I'll show you exactly why. When you get a big push up in junk bonds, this means risk on activity is really focused and very concentrated. But when it starts to curl over, you'll see the risk coming out of the market. That's exactly what we've seen for the past 2 days. Ah, Ken, you're just making stuff up. How can you prove that? I'm glad you asked. Let's look at the S&P 500. This is also on the daily basis. When we pop the indicator on, what do we see? As junk bonds was just pushing up, the S&P 500 was pushing up too. Look at all this structural resistance. Of course, price was going to be rejected and caught here. We can see the S&P 500 is a little bit negative, but just consolidating at the moment. With this concept in mind, of course, the rally didn't continue on because it couldn't. It hit structural resistance. Correct structural resistance and support levels must take into account all of price history, and that's done through the CTKS method. As junk bonds strengthened, as the S&P 500 strengthened and crypto rallied, we saw the US 2-year yield come down. You can see this bit of an uptick here is coinciding with the inverted nature of junk bonds. Ken, the what? The inverted nature of junk bonds, when I overlay JNK, which is the ticker for junk bonds, and then I go here and invert it, what do we see? The inverted nature of junk bonds relative to the US 2-year yield. The US 2-year yield can be thought of as your savings interest account. It's like the saving interest rate. The 10-year is your mortgage rate. As junk bonds started to curl over, and we can see that in the inverted rate of junk bonds, what happened? The US 2-year started to bounce. And as it starts to bounce, it takes the heat out of the crypto market and the stock market. It also depresses gold, silver, and other commodities. All markets are intercorrelated and interdependent, but you have to be inside financial markets for at least 3 decades to understand these things. Hence, when we look at total crypto market cap, and let's just look at it on a daily basis, we can see that we had this big surge up and now this push down. This is just related to how things are moving at the current time. This is the nature of the interdependency between markets. If junk bonds was to continue to come up, of course the crypto market would continue to come up, but every market has its own unique fingerprint of structural resistance and structural support. Let's just zoom in a little bit here. Now we're on the daily basis of total crypto market cap. What do we see? When we put the structural indicator on, it's just like magic. You can see the entire crypto market had structural resistance up at these levels. When you encounter structural resistance, it has to stop. The sellers are getting more and more power. And if you have a fresh air gap below, price can move down very, very quickly. And it can come up just as quickly on the other side. Fresh air gaps are a double-edged sword. What's happening right now inside crypto? It can take a while to understand this, but the main markets, the yields and the dollar strength is what's happening inside crypto, and it's what's happening inside the stock market. If people only focus on crypto, they miss the bigger picture. All financial markets are intercorrelated and interdependent. They're like a huge jigsaw puzzle. You've got yields, you've got bonds, you've got commodities, you've got crypto, you've got indices, you've got stocks, and you've got all sorts of components all around the world. If you just look at one piece, you're not going to form the jigsaw puzzle. You're going to be continually wrong-footed by the market, and you will not know why. You can look at as many charts as you want, but if you do not understand structure, you will be guessing. If you're guessing, especially with recent indicative price, you'll lose money. It's just the way the market works, unfortunately. The other thing that gets so many investors and traders, they read the news. The news is so positive, but the price is going down. Why is it going down? That's because the people who pay for the stories to go into the press and media just don't work in the same direction as the retail masses. Unfortunately, if you see really good news, that's often a time to sell, not a time to buy. But if you understand structure across all the variety of different charts, that's a different matter. We know that Bitcoin has a tremendous amount of structural support below it. It's quite safe to lean in. And of course, with all the Bitcoin news, ETF, all the ETFs coming, that's fantastic news. One thing to bear in mind, if you look at price action like this and you just draw up recent indicative price, you will never understand where price can go. These structural levels available through the indicator give you a leading indicator on where price might go. As price was coming up, we already knew that there was structural resistance overhead. The probability of getting a retracement where the sellers came back into the market and pushed it down was definitely the higher of the probabilities. The TradingView indicator that I pop on the daily videos is available at ctksmethod.org across all of these Tier 1, Tier 2, and Tier 3 charts. You can see that junk bonds is a Tier 1 chart. Tier 1 charts are the engine of financial markets globally, and the 10-year is also there. DXY, Bitcoin, Gold, VIX, NASDAQ, and S&P 500. When you understand where the Tier 1s are going, you have a very good comprehension of where the market can go. Unfortunately, when people first get into the market, it's very overwhelming. They only want to look at one chart. They want the analysis to be simple. They want certainty. If you're new to financial markets, please pop in new inside the comments and I'll do some content for you that will help you out. I'm here to help, but I need to know where you're at. When people get more advanced, they're still in the lose money rule zone. They start to understand that they need to look at more charts, but they may just look at the wrong charts. Typically, just anything they're investing or trading in. If you do this, and only this, and you don't form the jigsaw puzzle properly, you will lose money. Sorry to say it, but it's the truth. It's like saying, from this little piece of the jigsaw, I know exactly what this jigsaw puzzle will look like when complete, but you've only got one piece. You can't do it. And then you might have 2 or 3, or you might just be randomly picking pieces that are going positive. That is, chasing the tokens and the stocks and all sorts of things that are just going up in price. That's the worst thing that you can do. They're probably heading into structural resistance. Instead, you need timing. You need to know before it takes off, and that is possible. Financial markets will play with your emotional state. You must not let it do so. That takes a lot of time, effort, and focus to get independent from the market. The fastest way to do that is simply to understand the structure. But there's another secret weapon, and that is positive excellence. When you're kind to yourself, when you focus on your learning, when you seek inner and outer peace, you will make better decisions. And funnily enough, you'll have a much more enjoyable life. Inside Zone 1 and Zone 2, which is just the first 2 stages that everybody progresses through to become consistently profitable and enjoy life, inside these zones, people are chasing the Lamborghinis, the 100x returns, the 0% losses, and they get decimated. They want video content with zing and zang in it, all these special effects, but people who do special effects often have rubbish content. Inside Zone 1 and Zone 2, people want to be entertained. Forget entertainment if you want to make money. If you want to keep it, definitely forget about it. You need to learn. If you learn, you'll turn the corner. So what do you need to learn? You need to learn how to manage a large account, even if you only have a little bit of money. You need to learn how the entire jigsaw puzzle looks like when you're just dealing with 1 or 2 pieces. You need to understand the structure of the jigsaw puzzle. When you can zoom out to the 100,000 foot view and look at the markets and put all the different pieces together so you can see the ever-changing landscape of price movement, everything will fall into place. It will click. If you haven't done so already, get your free printable template of the CTKS timing cheat sheet at ctksmethod.org. Learn how to work inside these Tier 1, Tier 2, and Tier 3 charts. When you do so, the entire market will change. You'll be seeing things that other people just can't see. You'll see that literally the Tier 1, Tier 2, and Tier 3 charts all cross-interconnect with each other. They're simply moving in terms of price between structural support and structural resistance and so forth and so on. It gets fairly easy to understand what's going on, but at the start it's a little overwhelming. If you want simple, you want special effects, and you want entertainment, be prepared to lose your money. If you want to put in the hard work, be prepared to be more of a financial blessing to yourself and those you love. Be prepared to get the life that you've always dreamt of, but you must put in the work. If you want to hand your hard-earned cash to other people to manage for you, you run the risk of meeting this guy. You have the opportunity to meet people like Aiden. If you see people in front and posing in front of Ferraris or talking from private jets, there's a good probability that you're being scammed. The rich never show off. Do you see Gucci and Prada, Armani on the richest people in the world? No, you don't. You see them on people who are pretending to be rich. The cars, the houses, the jets are all supposed to say, hey, I'm wealthy, but wealthy people don't waste their money. They're already wealthy. They don't have to show off to anyone. This 23-year-old took millions of dollars out of other people's pockets. He spent that money on this lavish lifestyle. Have a look at a couple of the richest people on the planet. How are they dressed? Are they dressed in Armani? Are they talking from their private planes? Are they draped over a Ferrari? No, 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 and no. It's only the poor who have something to prove. With the richest people in the world, Louis Vuitton, Prada just doesn't show up on the radar. Here is Jeff Bezos and Elon Musk. Just be aware, these people are extremely well off. There are many types of scammers out there. There are imposters, there's social engineering, there's ICO scammers, there's phishing scammers, investment scammers, rug pull scammers. They're just everywhere. But you can overcome all these problems by not being greedy, not seeking to compete with people wearing Louis Vuitton, Gucci and Prada outfits. Don't worry about what car you drive. Worry about the person that you will become when you get wealthy. Financial markets offer unlimited prosperity, but only to the people who know how they work. Do not ever give your money to a third party to manage. Manage it yourself with your own knowledge. Taking 100% responsibility for your financial health is very important, and just don't trust things. Trust your knowledge and trust your capability to learn over time. The truth is that scammers can only impact people inside Zone 1, Zone 2, and Zone 3. In Zone 4, you become scam-proof. You'll listen to everybody, but you'll just be very discerning with what you do. Inside Zone 1 and Zone 2, people are really anxious. They want to get ahead very quickly, and the scammers take advantage of that. If you just finish uni, you might go to a job and say, I want the CEO's job, but that's a joke because you need to go through the process of learning the company, how the company operates, its culture, what you need to do, if you even like the work or not. Forget about being the CEO, just do the best job that you can possibly do. If you're good enough, it will come. And if you're good enough, just largely depends on if you do the work or not. The same is true inside financial markets. Scammers can only impact you if you're thinking from Zone 1 or Zone 2 thinking. If you think through positive excellence thinking, the entire world changes because you're not seeking something for nothing. You're seeking to put in the hard work. But Ken, I don't want to put in any hard work. Well, you'll fail then. Wow, that's a bit rough. I've never heard of a YouTuber saying that I'm going to fail. Well, you will, unless you put in the work. And that's the same across anything that you do in life. Hey, go to work and don't put the work in. You'll get fired. Hey, pick up a hobby like tennis and don't bother to train. Don't bother to learn the rules and hit the ball all over the place. You're going to lose games. Hey, get in a relationship and don't care about your partner at all. You're going to fail that relationship. Oh, you could make some money and you could just gamble it. You're going to lose it. It's the same rule across everything, but for some magical reason, people think that everything is different inside the stock market, crypto market, and other financial markets. It's the same rule. We are going to enter the bull run, and there's going to be so many scammers come out of the woodwork. We're seeing a pronounced increase in scammer activity. They're everywhere. Everybody wants the quick buck, but very few people are prepared to put in the hard work to keep it. Making money is one thing, keeping it is completely different. And you will find inside Zone 4, the life that you always wanted to have will be available to you, but you must put in the work. You've got to move out of Zone 1 and Zone 2 through learning and into Zone 3 where you understand how the markets actually work. You put the jigsaw puzzle together. You observe structure, and you do so with a positive excellence outlook. You're here because you want to hear the truth about financial markets. You're here because you're sick of all the idiots on YouTube and social media making outlandish claims that'll never happen. You're here because you want to be more of a financial blessing to yourself and those you love. If you think other people can benefit from this video, please share it. The quality of financial education on YouTube is woeful. Having been inside financial markets for nearly 4 decades and doing a finance degree myself, I can say that the vast majority of people who give financial advice or give financial education through their videos have very little comprehension of what they're talking about. And they get millions of views. It's little wonder so many people blow up their accounts. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.